Hi, I'm Darrin Fryer from Steamboat, Sotheby's International Realty here in Steamboat Springs. And I'm going to share with you some insights to the real estate market here over the next few minutes. The best way to describe 2013 was, it was definitely a period in our real estate where we really saw upward appreciation in price points. Some were actually very, very good, others not so good, but definitely all across the board improving. We were 100% out of the doldrums of the 2008 to 2012 national real estate issues, and really it was a market that came to healthy dynamics, a lot less having to sell people, a lot more wanting to sell, and a lot more buyers coming to the market from various places around the country. Well, some markets have really, from a segment point of view, increased. For example, in the condominiums, some have gone from $200,000 to $300,000, and that's a big increase on a percentage basis, as well as just on a pure $100,000 increase. Those properties might have been in the 450s at the peak, and so you can see a really strong recovery. We've got condominiums that have gone from $60,000 to $100,000 in certain complexes, single families that might have gone from $400,000 to say $520,000. But then not all boats have floated equally. Land is still languishing, although we're starting to improve now. That inventory is now being absorbed, which is great. But properties that have high HOA costs and possibly deferred maintenance, and maybe HOAs that aren't in a great fiscal position, are definitely being overlooked. And those properties have only increased very incrementally, not like the 25–30% that we've had in other categories. So all boats are not floating equally. We have a very fiscally astute buyers now, and unlike the 2000 and 2007 buyers, the new buyers of 2013, 14 moving forward have really good fundamental basis for their purchase. They're in good financial shape, looking for good interest rates and looking for properties of high quality that are in great condition, that have low maintenance costs and good incomes moving forward. A few things, as long as they stay fundamentally sound, such as we still have good stock market price points. If we have interest rates that remain relatively stable, although a little increase could certainly be sustained, maybe half a point to maybe a full point, as well as unemployment and general economic conditions staying relatively stable, Steamboat should see continual appreciation, and I do see that actually accelerating as we move towards the latter part of 2014. And the way that works is all of our feeder markets, such as the Front Range, you have Texas, New York, a bit of California, Illinois with Chicago, a lot of those feeder markets, and we have many more, they're just some of the larger ones. Those guys are having a lot of appreciation in their properties right now, and usually about a year to year and a half afterwards, we will see a bump in our appreciation and demand as people either use some equity for their property to buy a second home, put some down payment, or sell a property and use that capital appreciation to buy a beautiful home in Steamboat Springs or another great ski resort. And that's continually moving forward, and we're moving closer to that year and a half period after their appreciations have already started more than a year ago. From a new construction point of view, we've had the least amount of new construction in Steamboat's history for the past 4 years. And that's going to change in 2014. We have a lot of distressed lots that were bought in 2012, 2013, and I already know of numerous people looking to build this summer, and that is really going to change the local economy because it's definitely one of our bigger employers outside of the recreation ski area. So we're going to have a lot more new inventory coming on. There's a lot more home owner builders, and it should be great to once again get the good quality new inventory back in the market, and it's really going to revitalize the whole town in terms of our economy.